Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market continued to balance within a range, and heading into the open, our short-term bias is neutral and we're open to a move in either direction. We know that the market can break outside of this overnight balance and really tip to either side, and whichever way it breaks, that's going to be the dominant direction, and we'll be watching the underlying internals to make sure that they support the directional move, whether it's a break above 29 to 30.75 or a break to the downside below 19 quarter to 21 quarter. Until then, it's a very balanced market, and we are going to have to watch the price action and the underlying internals to figure out which side is being more dominant right off the open. Now, in order to get a sustained breakout above 29 to 30.75, we are going to have to see broad market strength and sustained upside momentum. And simply a lack of momentum either at pre-market resistance or on a breakout attempt above pre-market resistance can result in a failure at 33.5 to 35.5. So that is still valid resistance until broken, but we are going to have to see how the market approaches that area. If the market is breaking out on strong internals and strong upside momentum on the NYC tick, then we'll have to be a bit more cautious at 33.5 to 35.5. It is still a valid area, but if we continue to balance within this range and then finally break out on strong upside momentum, then we don't necessarily have to stop at 33.5 to 35.5, and there would be better odds of sellers stepping in at 40 quarter to 42 quarter and 43.75 to 45.75, and then from there, the higher you go, the better the odds of sell side stepping in. Given that today is a major catalyst with the US election, it is going to be risky for anyone initiating new longs above 29 to 30.75. From a trade location perspective, those are very risky prices, and we can easily get a pullback down into the 11.5 to 14 area in the event of a breakdown below 19 quarter, 21 quarter, and that wouldn't really even affect the overall market structure that has changed since yesterday's move. So pulling back to 11.5 to 14 would not really be that big of a deal, and the bullish structure that was put in place yesterday would still technically be intact. So right now, given that it's election day and we can get volatility within a range, we just have to be a little bit more careful with the trades that we take. And anytime that you're initiating a new long at these higher prices, just understand that it needs momentum. Without continued upside momentum, the trade is going to be very risky. And for that reason, we are going to look for short setups at the resistance zones. But it's not just blindly shorting the market at resistance in this environment. We also have to read the underlying internals and see what the momentum situation is like. If the market attempts to break out on very little momentum or a bearish disconnect on the advanced decline, then that makes it a very clear short setup. And on the downside, if we're breaking 19 quarter, 21 quarter, we can quite easily pull back to 15.5. The 11.5 to 14 area is really the first area of decent support. It marks yesterday's breakout, and buyers can be active there. Below that, we have yesterday's RTH low at 21.08. And then support at 0275 to 0475. So the expectation today is for the market to balance within a range, but that balance can happen either at higher prices or we can break down and balance at lower prices, and that's really what we're going to be watching to see off the open, is which scenario is more supported by the real-time price action as well as the underlying internals. By default, we are going to be more cautious on longs, and if we're able to secure good location and the real-time signals are not strongly against the short side, then we will be more focused on shorting the market at good trade location. But again, we do have to read the market in real time as well and assess the situation in real time and see just how much underlying strength is there. So for example, yesterday, we opened on a very strong advanced decline, which would be normal given the large gap, but the NYC tick remained above zero most of the session. So it told you that there was upside momentum. The intraday market structure was bullish as well. So ideally, you want to be more active on the short side when the intraday signs are supporting the idea as well. But first test of resistance can certainly attract sellers in this market. And like I said, the higher you go, especially into the 43.75 to 45.75 or 42 quarter, those are pretty decent areas of resistance where sell side can step in, and at that point you would be exhausting the range a bit as well, especially if volume continues to decline. So those are the main ideas heading into the open. Let's see which side really takes over here, and we'll take it from there.